Welcome to this explainer. Look, if you've grabbed a ride or ordered takeout anytime recently, you're actually part of a massive financial story. Today, we're zooming in on Uber's $58 billion crossroads. We're going to examine the sheer, staggering scale of Uber's current financial dominance, and then we'll pivot. We need to look at the existential threat and unprecedented opportunity that autonomous vehicles bring to the table. It's a wildly fascinating transition from a standard ride-hailing app to a foundational piece of global infrastructure. So let's dive right in. Let's kick things off with a frankly staggering number, $58.02 billion. That's the gross bookings, the sheer volume of value that Uber just moved through its platform in a single quarter. Growing at 24% year over year at this massive size, it kind of defies the usual laws of business gravity. We aren't talking about a scrappy startup anymore, right? We're talking about an entity processing tens of billions of dollars at a scale that very few companies in the history of the world ever achieve. And driving all of that volume? 208 million monthly active consumers, up 16% from last year. It perfectly highlights a textbook network effect. More riders create more opportunities for drivers, which improves availability. And then more delivery customers attract more merchants, making the whole platform even more useful. This isn't just a tech platform anymore. For 208 million people, it is literally the operating system for their daily lives. To really put that daily necessity into perspective, those users completed an unbelievable 3.9 billion trips in just one quarter. That's an 18% jump year over year. I mean, think about the physical logistics of that for a second. That is roughly equivalent to half the population of the entire planet taking a ride in a single quarter. It completely proves that Uber has evolved into a major, vital global transportation network that just powers everyday movement. Now, crucially for investors, we hit this metric, over $10 billion in trailing free cash flow. For years, Uber was famous for burning cash like it was going out of style, but generating $10 billion in free cash flow, meaning actual hard cash left over after all operating expenses and capital expenditures are paid, well, that shifts the story entirely. It flips the narrative from a cash-burning startup to a highly flexible, profit-generating machine. But there's a vital distinction we need to make here between the total value flowing through the platform, those gross bookings at $58.02 billion, and the money Uber actually keeps as reported revenue, which sits at $14.19 billion, growing at 12%. This gap is essentially Uber's take rate. It's the specific cut they take from every single transaction they facilitate. Basically, Uber is an enormous economic engine. They process that massive $5.8 billion, sure, but the vast majority of it goes right out the door to pay the drivers, the restaurants, and the couriers. The $14.19 billion is what they actually keep to run their own operations. Grasping this difference between the money processed and the revenue earned is absolutely essential to understanding how the company truly makes its money and scales up.
Section 1. Building a diversified platform.
Right, so Uber is essentially this multi-headed giant today. The original mobility business, getting from A to B, is still the core at $29 billion in bookings. But delivery is right on its heels, generating an astonishing $27.5 billion. And then you've got a quieter but highly strategic $1.6 billion freight business. Consumers don't just want to ride across town anymore. They want deep convenience, local commerce, and logistics tied seamlessly together. The strategy here becomes incredibly clear when you look at their expanding logistics reach across people, food, packages, and freight. Why does this matter? Well, because getting a new customer is literally the hardest, most expensive part of running a business. Once Uber has you on your phone, they can seamlessly cross-sell you everything from an airport ride to your dinner delivery. It creates an incredibly sticky ecosystem without having to build a new consumer network from scratch.
Section 2. The shift to profitability.
So GAAP net income jumped an impressive 77% to $2.39 billion. But a quick caveat, that includes some on-paper bumps from companies Uber has simply invested in. To see the true health of the core business, we've got to look at the non-GAAP earnings per share, the actual cash engine generated from their daily operations. That grew 35% to 81 cents, which gives us a much clearer and highly substantial picture of their underlying operational success. In the tech world, cash is an absolute weapon. By churning out roughly $2.79 billion in quarterly free cash flow, Uber has unlocked immense financial firepower. They have the cash on hand to aggressively invest in new tech, pursue key partnerships, return capital to shareholders, and ultimately fund their next massive phase of growth. all without needing to beg for outside funding or take on heavy debt. But despite all of this massive current success, we really need to pause and ask a critical, completely paradigm-shifting question. What happens when the driver just disappears? Today, the human driver is one of the single largest costs in the entire ride-hailing equation. When you yank that cost out, the economics of the ride change dramatically for absolutely everyone involved.
Section 3. The Robotaxi Revolution.
There is a totally fascinating dynamic emerging right now. It's a paradox, really. Uber has hundreds of millions of customers that autonomous fleets desperately need. Look, building an active network of over 200 million daily users takes a decade and billions of dollars. Autonomous fleets just don't have that audience yet. But on the flip side, they hold the keys to the actual vehicle technology that Uber desperately requires to survive the next transition. And this tension creates a massive existential threat. What if the companies controlling the software and the actual robotaxis decide, hey, we don't need Uber's platform at all? What if they just build their own consumer apps? They could control the fleet, launch an app, and completely bypass Uber, rendering their massive global network suddenly obsolete. The future could depend on which side controls the customer relationship. That right there is the absolute battleground. Strategic partnerships and platform strategy are going to be the ultimate deciding factors for whether Uber survives and dominates in the autonomous age, or if they just get completely left in the dust by companies building both the car and the app.
Section 4. Bull versus bear cases.
Okay, so the bull case outlines a veritable utopia for Uber. In this scenario, they successfully transition into a highly profitable marketplace connecting massive consumer demand directly with robotaxi fleets. That means higher margins and ecosystem expansion without even owning the cars. The bear case, though, pure dystopia. Autonomous fleets bypass the app completely, competition intensifies, and Uber is forced into heavy tech spending just to survive, alongside price-sensitive consumers and resistant drivers. If you're watching this stock, or honestly just watching the future of transportation unfold, these are the key indicators you've got to watch. Autonomous partnerships, the actual speed of robotaxi deployment, margins, cash flow, and sustained consumer growth. Tracking these will reveal if Uber's future success is already priced in, and if they're merely growing a legacy model or fundamentally transforming for a completely driverless world. I want to leave you with this final thought today. When the car no longer needs a driver, who controls the customer? If Uber maintains its grip and controls that relationship, they're going to absolutely dominate the future of global mobility. But if they don't, the very next generation of transportation could leave them behind entirely. Keep a real close eye on this space, and thank you for joining me for this explainer.